Good morning again. As I mentioned earlier, I would send you another video just explaining what I look for before I place a trade. What you're looking at now, the left chart here is gold US dollar, the right chart is US dollar Japanese yen. So why do we trade this? Why do I trade gold? Trading is about making profit. And trading is about making regular profit, which hopefully will change your life one day. If you are jumping from one thing to another, you can miss opportunities. And if you are not used to the rhythm of that particular financial instrument, it's also easy to make mistakes. Before I would ever trade another instrument, and I traded Bitcoin a couple of times the other week, and I made profit on both trades, I studied the charts first. I watched the charts first. I spent a bit of time seeing how the charts were moving before I decided to trade Bitcoin. And I'm going to trade other things as well. But the reason why I suggest gold first and US dollar, Japanese yen is because it's an easy one to learn. It's an easy one to begin making profits. And that's what the game is about. This is a game that you're playing with the big boys, and you want to win this game. And you want to win this game, so you're always there. You're always there making profit. Your life changes, you become more comfortable, and then you can start making your own life choices. Instead of getting up in the morning and having to do the same job all the time, you can decide, do you want to work or do you want to just pack in work and trade? So anyway, just to go over the code to trade, I always explain that the monthly chart is one of the most important. So this is why I've got the monthly chart on gold US dollar and the monthly chart on US dollar Japanese yen. And what's this chart telling us? So if we look at US dollar Japanese yen first, if you look at the commodity channel index and you look at the Bollinger Band, what you can see is on the monthly chart on US dollar Japanese yen, it's already been oversold. And now it's actually past the zero on the commodity channel index and it's heading up to be overbought. So it's not overbought yet. But when you're looking at the chart itself, it's against a very strong resistance. So this is the 20 moving average. Remember, red is a 20 moving average. And then you've got the 50 moving average, which is kind of the pink. So even though it's against a strong moving average, it's still not overbought yet. So that suggests that the price could go up a little bit more. And if you also look at the Bollinger Bands, it hasn't hit, US dollar, Japanese yen, hasn't hit the upper part of the Bollinger Band since 2015. So that's like 5 years ago. So 5 years ago, over that time, it's went through the bottom of the Bollinger Band, spiked through it here in 2016. Then it spiked through it again here in 2019. And it spiked through the bottom here September last year. Now that doesn't mean it's going to spike through it this month. It doesn't mean it's going to spike through it this year. I mean the top of the Bollinger Band. It doesn't mean it's going to do that. We just have to be aware. We have to be aware that US dollar, Japanese yen has not been oversold for a long time. The last time it was actually really, really oversold was 2012, which is a long, long time ago. That's the last time it was really oversold. Then you can see it was 2014, and then it peaked. It peaked, and this is when the price was coming down. You can see the divergence there, 2015. So it's been kind of overbought and now oversold. It's been oversold 3 times without being overbought. So is the trend about to change? We don't know yet. But anyway, we know that price is against a very strong support resistance. So the 20 moving average and the 50 moving average. We know that very strong resistances are here, because you can see how price struggled going through. So there's a good chance that if price is not overbought and it's still got somewhere to go, there's a good chance that price could be heading towards a strong resistance here, which means that by the end of this month, price could close above the 50 moving average. If it closes above this 50 moving average, then the next month it could be heading towards the Bollinger Band. We do not know yet. Let's just see. So then you've got to go to the weekly chart. So on the weekly chart, price again has not been overbought for a while. It's been oversold, and that was back last year, or 2018. 2018, it was oversold. It's been oversold again, which was 2019, August 2019. But what we can see here, which is very important, price struggled to go through the 100 moving average. So see the blue line here? Price struggled to go through that. And then last month it actually broke through it and it went up to the 150, but it did not spike the Bollinger Band. So that's what you're kind of looking for. You're looking for price to spike the Bollinger Band. That means it's way overbought, and then it'll come back down again. So what's happening now? You always know that once price tests a strong resistance, it'll come back down. This is what happened here. Price came down. And then you've got a very, very strong bull candle. So the bull candle is engulfing. Engulfing just means it overshadows this candle here. And if you put these two candles together, it's maybe roughly about the same size. So it's roughly about the same size as two candles engulfing. And you can see that's attempting to go above the 100. So the price is above the 0 on the commodity channel index, and it's above the 100 moving average. My feelings are price needs to touch the 100 again, the 150 moving average. Price needs to touch the 150 moving average again. So if price is heading towards the 100 moving average, 150 moving average, the green one, what is that going to do to gold? Now that's going to bring gold down. Because if US dollar is going to go up, then gold is going to go down. So what I mean is US dollar against Japanese yen. If US dollar is stronger against Japanese yen, gold will come down. So let's just look at gold for a moment. So if we go to the monthly charts, you can see that gold has been way overbought. And it was way overbought August, September last year. August last year, it was way overbought. And can you see the divergence? So as the price has increased, going upwards on gold, it's been actually coming down. See this? The divergence has been coming down on the commodity channel index. So that's kind of signaling, it's a bit of a tongue twister for this time of the morning, that price could be coming down for gold. That's what signaling, or that's what the signal is. Let's make it a little bit easier. And you can see this is a little bit of a bull candle showing this month. Now what you've got to be cautious of, because this is a this is a bear candle. This is a bear candle forming this month of February. It was a bull candle before, but the divergence is now below the 100. It's now showing a bit of a bear candle, a red one, but we still have over 2 weeks to go. So anything can happen in 2 weeks, absolutely anything. So what I will be looking out for is on a weekly chart, I'm looking out for price reaching the 150 on the US dollar JPY, and also maybe going through the Bollinger Band, which means gold could be coming down a little bit further. If you look at the weekly chart, it's a bit of a bear candle there. So yes, it touched the 8 moving average, and it's kind of a bear engulfing candle. Can you see it engulfs? It means it overshadows these candles. You know, it's a larger candle. So there's a good chance that price could retest the 8. And if it retests the 8, then it's going to go for the 20. Now, these are big trades. These are trades where you can be in the market and earn big pips. But we've still got 4 days to go this week. So because we've still got 4 days to go, you've got to start looking at what's happening now, what's happening today. So we know that gold's been on a bull run, but we know that we've got rejection candles here. So you've got this rejection candle, great big rejection, and also you've got the divergence a bit. So you've got gold became oversold. It was early January, and while gold's been carrying on and going up, what's been happening with the divergence? The divergence has been going down. So that could be suggesting that gold's becoming weaker. Now that doesn't mean that you jump in with a sale or a short trade. It does not mean you jump into gold with a short trade and start selling gold. So what we've got to do now is let's look to see if there's anything going on the 15-minute chart. Just to see if there's anything signaling that there could be a price change. And this is a live chart. We're looking at these charts live. And there could be a bit of a long trade coming up. Now, you've still got 6 minutes to go on this candle. So it's a 15-minute chart. It's 6 minutes to go. And you can see there's a big rejection here. You can see that there's a big shadow forming. But anything can happen over the next 6 minutes. Let's just wait and see. It's showing that it's overbought here. And what's happening, there's a bit of a rejection candle here. Because it's a 15-minute chart, it's a weak chart. It is not a strong chart. It's a weak chart. It's a risky chart to trade off. So then what we have to do is say, okay, there's showing a little bit rejection on the US dollar, Japanese yen. We need to see what happens in 6 minutes. Now, I would never look at anything and trade anything off a 15-minute chart. So look at the 30-minute chart. Yeah, that's a positive one. It's come off the 150. It's rejecting the 150. There's a good chance US dollar, Japanese yen is going to start falling. Just falling slowly, maybe down here or maybe just down to 20. There's a big chance it could fall. Let's look at the hour chart. So the hour chart's got 5 minutes to go. It's touched the Bollinger Band. It's shown a bit of rejection. There could be a long trade on gold coming up. Let's just wait and see. Let's see the 4-hour chart. The 4-hour chart. So what's happened on the 4-hour chart? Why are you getting that rejection on the 15-minute chart? Why are you seeing this long shadow on a 15-minute chart? The reason why it's rejected is because on the 4-hour chart, it's hit the 20 moving average. See how powerful these moving averages are. As soon as price hit the 20 moving average, it's showing rejection. So potentially, price will come down and it'll retest it again, and it may go through it the second time. So you can see price did move below the 8, below the 20, then it came back up to retest the 20, retest the 20, it struggled. So two attempts to reject, it came down, hit the Bollinger Band. Now it's touching the 20 again. That could be touching the 20 to raise above. I still think US dollar needs to go up further because it needs to hit the 150 on the weekly chart. Remember, look at all the charts to get a clear picture. If you remember the masterclass. But it could be a short, long trade in gold. So let's just start looking at gold. On a 15-minute chart, it's starting to go up. So what's happening on a 30-minute chart? Yeah, it could go up to the 8. So let's look on the hour chart. It's rejected the 200. So you can see there, rejection off the 200 here, went up. So is it rejecting the 200 again? And then could it go up to the 8? Let's see what's happening on the 4-hour chart. Now the 4-hour chart is went through the 8. So I would be cautious now. The reason why I would be cautious, and I may not even place a trade, because I would want to see there's another hour to go on the 4-hour chart. I want to see where the price will close below the 8. Or is it going to go back up again and close above the 8? So I would be personally being cautious now. And if in doubt, stay out of the market. If you look at the pips, because it's in between the 50 and the 20, so sorry, the 8. It's in between the 8 and the 50. It's in between the 8 and the 50. The 8 and the 50, it's 21 pips. If it closes where it is now in an hour's time, is it worth taking a trade for 21 pips? It's up to you. But if you're looking on the hour chart, potentially price could be going back up again. So if price does go back up, and it goes back up to the 8, yet again 17 pips, is it really worth risking going into the market for 17 pips? Personally, I wouldn't. I just want to stay out of the market. I'm not going to enter a trade. I just want to see, even though this is looking here on the US dollar Japanese yen, even though it's looking as though the price may be going down for a short period of time, I'm uncertain what price is going to do on gold. When I'm uncertain, I stay out of the market. 12-hour chart, it's above the 8 moving average, it's at the 20. So is it going to go up again, or is it going to come down? What you could be seeing here, there's something called head and shoulders. You could be seeing a head and shoulders. So this is a shoulder, this is the head, and this is another shoulder. If it's a head and shoulder, price is going down. So generally what happens, our price could go up again and close here. So then you've got the shoulder, the head, another shoulder, which is always below the head. Then price will start going down. So I'm unsure what price is going to do at the moment. Look at the daily chart. A dojo, see this candle here? This candle here. So it's got a very, very little body and shadows at the top, shadows at the bottom. That's called a dojo. A dojo is uncertainty. A dojo means be cautious. So it's telling you that on the 4-hour chart, you're not really sure what's going to happen. I'll be staying out. So I'm going to draw this video to an end now. This is how I analyze the charts. So what I will do is the next trade I look at placing, I'll do a video of it telling you why I want to place the trade. If you look on previous videos, there is a video there where I think I have talked about the trades I've placed. I think I talked yesterday about the trades I've placed. But this is the analyzing that I do. And I do this analyze to keep myself safe. So this is why when I place a trade, I virtually never lose. I think I told you all, the only trade I've lost in 2 years or more is a silly one I did in November because I did not follow the code. Other than that, I never lose trades. I never lose trades. I just take my time. Anyway, this is drawing this one to a close. I'm going to be watching out to see if there's any trades that's coming. I do have a lot of work to do today, so I may trade, I may not trade. I'll see if there's an opportunity. If there is an opportunity, I'll make sure I take a video so I can send it to you. I hope that's been helpful. If it has been helpful, please give me a thumbs up. Please let me know. Leave comments. It's always very helpful. So thank you for taking the time to watch it. Have a great day. Look forward to catching you later. Bye for now.